Hi, good afternoon, everyone. Very warm welcome to Sygnum's Crypto Market Outlook 2024 live stream. I'm joined once again by Sygnum's Head of Investment Research, Katalin Tischhauser, also the report's author. Hi, Kat, how are you?
Hello, how are you?
Fantastic. So before we start, as always, today's content does not constitute investment advice. So that said, let's get underway. There's many reasons to feel optimistic about 2024. Advancing institutional adoption, the unshaken conviction of long-term holders, new use cases at the intersection of AI and crypto, the traction of real-world tokenization, and many others. But Kat, the cover for this year's Outlook is a wintry landscape with a window looking out onto perhaps a new season, a bit brighter, looking at the first shoots of spring. So when you look out, what do you see?
It does feel spring-like. It's a nice way of putting it. The market actually turned bullish in the course of last year due to some quite significant pivotal developments that I would say pretty fundamentally changed the crypto landscape. I think 2023 left quite a legacy that is shaping the crypto market going forward and specifically this year. And the most important of these, of course, is that some of the world's largest financial institutions embrace crypto, with BlackRock, Fidelity, and others filing and then launching Bitcoin spot ETFs now. This, of course, raised the prospect of substantial inflows into the crypto market. Crypto being still a small market, this is in itself a significant development, but it also really credentialized the market in a significant way, which means that we're also seeing and expecting to see inflows into the market, not just through the ETFs, but directly and through other investment vehicles. Basically, this credentializing and mainstreaming is a turning point. And suddenly we see even conservative institutions like insurance companies, they're prepared to consider the portfolio diversification benefits of crypto as an asset class. These benefits hypothetically were always there, but there were other reasons that these institutions would not consider the investment. And there has really been a turning point in this regard. And I would also add that the cleanup of the last 2 years, flushing out a lot of fraud and bad practice, also helps the perception of crypto. Of course, the welcome conviction of Sam Bankman-Fried, the cleanup of Binance, and so on. Basically, these made the asset class investment ready for even conservative institutions. And one more thing that I would mention is that crypto's correlation with other asset classes that was high for a short period of time, that basically faded away. It reverted to historic norms of being more or less uncorrelated. And I think this is also something that makes crypto attractive, of course, to institutional allocators. So overall, it's a positive setup for the crypto market.
So I'm sorry if anyone is experiencing some patchy reception. We may have some issues with the platform today, but we're gonna keep going. So in our report this year, we cover many areas: market cycle changes, adoption and fund flow, supportive regulation around the world, innovation in interesting areas like zero-knowledge, our sector outlooks as well. But let's start at the very beginning. Katalin, are we in a bull market?
I would say that the signs are very strong that we are in the early phase of a bull cycle. And I would list a couple of these. So, for example, the market has been driven up to this point overwhelmingly by institutions. That's usually the case in market cycles, that we see institutions coming in first and retail more at the tail end. So, for example, seeing the CME platform having an all-time high market share, CME being the platform where institutions tend to trade versus retail using other platforms. So these are all signs. We're also seeing it through our business and from anecdotal evidence, and also from where we can observe retail flows, that really it's been an institutionally driven move mainly to this point. That's usually the sign of an early stage bull cycle. And we're just getting to the point we're starting to hear evidence that retail is starting to be interested and get involved. Of course, it's not unrelated to the ETFs that have been launched, but this is still very, very far from that sort of frothy excitement of retail investors that usually signify a late stage of a bull cycle. So the up move we have seen so far, I would still say, is the early phase of what we will probably end up with in this cycle. And there are some other indications. For example, long-term holders balances are at all-time highs. So people's conviction in crypto is very high, even though the price rises last year, especially in the last quarter of last year, were very substantial. And overall, the price performance of a lot of tokens and the market overall last year was very strong. We haven't seen any selling at all from long-term holders. In fact, their balances have been rising. And if we fit the pattern of past crypto cycles, they have followed a very similar, very predictable pattern. And if we fit the current one, we would say we can see roughly that we are still in the early stage of this cycle and maybe getting close to the inflection point. And one other thing I would mention here is that in crypto, the early stage bull cycles so far have always been led by Bitcoin. It happened for different reasons. Bitcoin's drivers were different things in the various cycles, but it was always Bitcoin that moved first, and then in the latter phase of the cycle, the other tokens followed the takeover.
So regarding Bitcoin's dominance, which currently is sitting at 52.52 just a few moments ago. So talking about Bitcoin, what do you see as the key drivers for that?
Yeah, it's so of course Bitcoin's dominance rose a lot last year, and it is because there are strong drivers for Bitcoin. Innovation on the Bitcoin network was reinvigorated after a very long time of very little happening, and Bitcoin being very uninteresting in that regard. There's a lot going on now, and continues to, and this also led to an increase in on-chain activity, transaction count, transaction fees earned by the platform. Actually, Ethereum used to dominate Bitcoin in terms of transaction fee revenues by a lot. If you chart it, the one line is down there, the other is way up there. And by the end of last year, these two lines got closed. By the end of last year, they've been quite closely tracking, and quite often for periods, Bitcoin dominates Ethereum in terms of transaction fee revenue. So this is a very important development, very positive development for the network. And also it's important because of the upcoming halving, and that will of course take half of miners' block rewards off the table. But then if transaction fee revenues make up for that, then that's very, very positive. And the halving, now that I've mentioned that, that's of course an important reminder of Bitcoin's core value proposition of immutable scarcity. And I think against the backdrop of the global macro tail risk that we are seeing out there, this is particularly important. And I haven't mentioned the most important driver, but of course the newly launched ETFs and the inflows into these ETFs are likely to be an important driver of Bitcoin.
Sure. Well, it's certainly not all about Bitcoin, is it? But moving on to the second largest crypto by market cap, Ethereum. So what's your take?
Yeah, Ethereum's been a huge underperformer for a year and a half. And this has been, I think, a surprise for a lot of people. Of course, over time, there were reasons why it went that way. But fundamentally, after the merge upgrade a year and a half ago, and Bitcoin turning deflationary, and so Ethereum turning deflationary, everybody expected that would catalyze outperformance. Instead, it did the opposite. This now leaves, especially as the narrative favored Solana over the whole of last year, and the price performance the differential was quite substantial. I think this now leaves Ethereum really undervalued, which is a nice setup if there are catalysts. When there is growth in the market, Ethereum is still, of course, overwhelmingly the largest smart contract platform. So, of course, the primary beneficiary of growth. And there are a number of catalysts for Ethereum on the horizon. There is the ongoing scalability upgrade, which is very important. First of all, it will focus eyes on Ethereum again, but scalability is so important in crypto still. So it's the kind of upgrade that people should really care about. There is, of course, the spot Ethereum ETF filings and the expectation that they will probably be approved in the course of this year. It's not a certainty, but after spot Bitcoin ETFs and futures Ethereum ETFs have been approved, it's sort of very hard to see the argument for not approving spot Ethereum. That can be another catalyst. And then there's also more technical trends for restaking and shared security, which basically increases the demand for the Ethereum network. And that's an additional catalyst.
So we certainly see AI making headlines everywhere, both good and bad. But is this relevant for crypto? What does it mean for us?
It can be quite relevant. It's and in many ways that can go in both directions. So it's basically, we describe it as the intersection of crypto and AI. And lots of things, lots of benefits can come out of it actually in both directions. AI can make crypto protocols better. Sort of can be a tool to source inputs efficiently. Something even more important, one of the issues that crypto has been struggling with is generally poor UX UI. It's people focus much more on the tech and less on the customer experience. And AI can really help to create vastly improved, customized user experiences, can help to manage decentralized autonomous organizations, for example. But then the other way as well, for example, crypto, and you already mentioned zero knowledge proofs, can be used to prove creator authenticity. Was it a real person or was it AI that created some content? Then AI agents that are appearing and will become useful in performing various tasks. Crypto can allow AI agents to transact autonomously. And then, of course, there is the already ongoing trend that AI creates demand for certain services. So, for example, rendering decentralized computing resources, which several crypto projects provide the demand for their services, has, of course, shot up, and these projects are doing very, very well.
Sure. So out of all of the insights in your report, you got any last remarks, anything else you'd like to touch on?
There's so many, so I'm just going to pick one, but there's actually a lot going on, good things in the crypto market in terms of use cases and innovation. But I would pick one, which is tokenization. I think this has been a story that has been muted for years, many years. But now we're really seeing the trends that tokenization might be taking off and be a growth engine for a lot of crypto projects. A lot of traditional financial institutions are investing in tokenization platforms, experimenting with use cases. Governments are generally supporting it. The BI as well, they're creating sandbox environments. So it sort of feels like it's already, of course, we already see growth trends of a low base, but it feels like this could really finally start to snowball. And of course, a lot of crypto projects, it could be the TradFi who invest, of course, they will also benefit, but it's definitely a driver for a lot of DeFi projects that would trade, lend, insure, create tokenized assets, and various other segments of the crypto market. So it's an important trend.
So look, zooming out, just to finish up, what are some of the fundamental drivers you'll be watching to support and maybe accelerate the markets this year?
We already mentioned the ETF inflows, and I think this is very significant. Sorry for repeating it slightly, but it is important. It's the world's largest asset managers that are bringing these products, and they're pushing them hard. There's fee breaks, introductory offers, there's massive marketing campaigns, almost unprecedented, and I think it is very likely that over the next year the inflows will ramp up quite substantially. But aside from that, we're seeing a lot of innovation. Actually, we have this cliche in the crypto market that build in a bear market, and that this has usually been the pattern. And we're seeing it that during the last bear market, indeed, crypto has been building, and now this is bearing fruit. And we're seeing some very exciting, innovative protocols and use cases being launched currently and get traction. So that's quite exciting. I have to mention regulation. This basically, it was very negative at the beginning of last year and then turned much more positive towards the second half of last year in the US, as court cases went in favor of crypto. And then, of course, other regions, especially countries in Asia, have been enacting very supportive regulations. So there's a lot going on there outside the US. And in the US, we will have to watch these remaining court cases, SEC versus Coinbase, SEC versus Binance. They'll be important. But based on the early statements of the judges in the cases, it's leaning more favorable. And I think being an election year, I don't expect that anything dramatic would happen in US crypto regulation, either positive or negative, to be honest. So at least it's not going to be a negative. I think politicians will sort of continue posturing and without causing waves. And that comprehensive crypto regulation will probably not come this year in the US, but it's overall leaning positive. Then, of course, the macro backdrop now with the spotlight back on Bitcoin as a safe haven asset, as the macro tail risk increases, that's of course significant. We just heard Jerome Powell say the other day that the US government is on an unsustainable fiscal path. Macro tail risk, buy safe haven assets that basically provide a macro hedge. Another interesting thing that the renowned investor Bill Miller said also a couple of days ago, he called Bitcoin an insurance policy against financial disaster. And I think that's quite a good way of putting it. And of course, Larry Fink's quote sometime last year that Bitcoin is a flight to quality. So that's also an important driver of the market currently. And just finally to mention, there's a lot of talk on rate cuts this year. Eventually, now it looks like maybe later, maybe not so fast, but basically expectation for easy money, and that's good for all asset classes. That's not a crypto specific. When liquidity is more easily available for crypto, that would be the icing on the cake.
Yeah. Well, speaking of the icing on the cake, I think that's the icing on the cake for our live stream today. Katalin, thank you very much for this fantastic report, and to you and your team, congratulations. Thank you for unpacking it today. Apologies if anyone's seeing any issues with the feed on the platform. Very sorry about that. But if you really want to dive into this deeply, please read the report. You can visit an education section and download it there. Please also join our over 30,000 strong community on LinkedIn to keep up to date with our latest news, launches, and research. So it's goodbye from me and Katalin. Thank you everyone for tuning in. Thanks for some great insights today.